Hey, what's up everybody? Tarafdar back with a brand new video. So today I want to talk about the 5 business credit hacks that are little to not known to a lot of people who are starting their business, who are in the process of building business credit. And I want to share this with you because I believe it's important if you're considering starting a business, if you're considering going into the avenue of building corporate credit or business credit for that matter, you need to know this. If you don't, then probably what's going to happen is as you're building your business credit, you're going to get stuck along the way. You're going to face some obstacles. You'll be disappointed. So my objective here today in this video is to give you those 5 hacks so that you can walk away with some knowledge about what to do, how to overcome those obstacles, and what are some of the steps that you can take so that you don't have any challenges along the way as you're building your wealth through your business. So let's get started. So as the title suggests, it's the 5 business credit hacks. The first thing is about the industry, right? Everybody wants to get excited. They want to do real estate. They want to do, a company that's probably a restaurant, maybe a hotel or restoration or hospitality. Some of them, they want to do manufacturing. Some of them want to just do trucking. Whatever the case, whatever that you're trying to do or you're trying to start, I believe the first thing you need to know is about the industry. How is the industry looked upon in the lender's eyes? How is the industry conceived in terms of perception to those underwriters, right? To the risk profile of those institutions that are going to be extending credit to you. As we know, business credit is a long-term game. It doesn't happen overnight. It's not a 24-hour process. It's not credit cards. So what you're going to have to do is you're going to have to find a way to get that business credit in a 6-month period, and maybe sometimes 7 to 8 or even 12 months, right? It just depends on the speed that you'd like to take. It depends on how you want to build. So in that process, what you want to do is you want to start thinking about the industry that you're in. How is underwriting considered in that? Is it high risk? Some of the high risk can be, for example, restaurants. Believe it or not, even though it's been around, it's pretty much the backbone of the economy, the service industry. A lot of people are there, but it's actually considered high risk to lenders because albeit that there's a lot of restaurants out there and they're surviving really well, and depending on the amount of stress that the owner has to take on, it may look like, oh wow, it's a really lucrative business, it's a very profitable business. But the problem is, even though they've been around and they're doing well, doesn't necessarily mean on the underwriting decisions it's going to be easy, right? You have more restaurants that have defaulted in the last several years than that have opened, or let alone having financing. And of those who are opening are borrowing from their friends, family, or even investors who believe that they can help back that business to make something lucrative or profitable, right? So there's a lot of defaults happening in those type of industries, specifically restoration. So that's one thing to consider, right? Also, you have to understand when you consider yourself a high-risk industry, you're going to pay more fees in terms of merchant accounts, banking, interest rates, all these type of things. And you don't want to step into the territory of paying a lot of fees to get your business off the ground, right? You want to make sure that you're doing well from the get-go, that you're paying a considerable lot less compared to the high-risk industries. And then from that perspective, at least you're profiting, you're making something. So that's the first thing in one of the business credit hacks. It's the industry that you choose. The second thing we're going to talk about is personal guarantee. See, a lot of people think that you get into the business credit world and there's no PG and PG funding, which is 100% true. You can absolutely obtain funding without personally guarantee. But here's the problem. When you do that, you're going to get very little amounts. You have to build that trust with that financial institution. Sometimes that trust building effort to make sure that they have confidence in you and your ability to pay them back can take months, sometimes years. So the reason I say you have to consider personal guarantee is because if you have a project, right, economics change, right? Wherever you are today, the demographics, it can be profitable to start a business, and tomorrow it can be something not so friendly. So because of the fact that time waits for nobody, right? The markets wait for nobody. You have to consider the optimum ways of getting funding for your business. So the best thing to do is consider personal guarantee. A lot of people think it's a risky thing to do. No, there are things that you can do to defer that. We talk about that in the Ultimate Business Credit Mastery course, and how you can defer your risks to protect your assets and your business so you don't get sued by creditors. But you have to consider that that's one of the hacks that you'll have to understand. Now let's assume you do get no PG funding. What's going to happen is a lot of lenders are going to ask you to put skin in the game. For instance, you're buying a business, you can do 100% funding, but then they're going to say, well, there is equipment, that's fine, but there's a lot of risk also about the business, right? And if it's a high risk industry, forget about it, right? There's going to ask you for heads and tails. So the best thing you can do for yourself is understand the personal guarantee game, fix your personal credit, and get into it by helping yourself build solid credit while also building business credit that's very strong, so that you don't have objections, you don't have obstacles, or even challenges when you're trying to obtain the funding. So that's the second point I'd like to talk about. The third thing I want to talk about in business credit, and we're talking about credit hacks, and the reason why we're doing this is because I want you guys to be really comfortable when we get to that point. The third thing is the joint ventures with your business, right? When you start a business, one of you guys can be doing the business, put some equity in. You can be operating the business while building its cash flow. And this is where investors back you. This is where other competitors that you may think are against you, there's an opportunity to create a bond. There's an opportunity to go ahead and work with each other to create something lucrative. So you guys have to think about that. You guys have to think about the opportunities that you can create through joint ventures. It's going to get you much faster to your financial goals than you think. A lot of people think starting their own stuff is great, and it is 100%. But the thing is, in today's society, joint ventures and partnerships lead the way. There's a lot of money to be made. There's a lot of wealth to be built. And also it helps you understand different personalities, help you understand other business types, right? It helps you create more everlasting catalysts, which we talk about in the Ultimate Business Credit Mastery. Catalysts are essentially individuals who have access to a lot of your customers, your future potential revenues, right? So that's a consideration you'd have to take. So that's the third business credit hack, joint ventures. And finally, you want to talk about the fourth one, which is underwriting, understanding underwriting. When you go to a lender, right, put yourself in their shoes. That's the best way you can consider underwriting. The risk profile of your business. How long have you established credit on it for? What kind of industry do you have? Do you have financials in your bank account that demonstrates that you're an actual business and you're not just financially engineering your file so that you can get away from your personal credit obligations, right? Because business credit is just not another credit card for you. It's an actual business. There's a lot more consequences on a legal level if you mess up in business credit. So it's very important that you understand underwriting. Before you even get to thinking about business credit, you have to think about business, right? Because business means you have to do profit. You have to generate revenue. You have to think about customers, how you're going to be situated. The economics of the whole system is very critical. So understand underwriting. If you understand underwriting, and that's one of the biggest hacks in building your business credit, you'll have a lot of success when it comes to funding. Once you understand the goal and the game, it's a lot easier. Then you have to systemize. You have to engineer it in a way that's making it easier for you to obtain the funding that you need. And finally, we're going to talk a little bit about building solid business credit, right? So we talked about the four other things. We talked about the industry, your personal guarantee, which is very, very critical. We talked about joint ventures potentially. We talked about understanding underwriting. And finally, how to build solid business credit. We need to know that, right? There's a whole system behind it. Right? When you start thinking about business credit, you got to understand, hey, I'm going to build business credit, yes, but here's the thing. A lot of people get into these systems, and there's a lot of people selling these business credit courses out there, and I'm not trying to push mine. I'm just being very honest with the systems that are out there. They're not too in-depth about the actual business philosophies, the business technicalities, the things that you absolutely need to do to make your business fundable. Right? They just leave you hanging. It's your role and responsibility to make sure that when you're building a business credit, every system that's behind it can back the way you go through underwriting, and also how you build your solid business. Right? There's a concept behind the understanding of building a lucrative business that, of course, I teach in my Ultimate Business Credit Mastery course, but I want you guys to understand that that's one of those things. When you're building business credit, you have to build it solid, right? Even if it takes months. This is a game of patience. You cannot rush this. It's not a game where you come in and then you just try to get funding as soon as possible. And we're going to talk about shelf corporations in our next video. But the most important thing for today I want you guys to understand is those 5 key principles of business credit hacks. The first one is the industry that you're in, right? Is it a high-risk industry? The second thing is your personal guarantee. The third thing we talk about is joint ventures, creating partnerships, getting to build your wealth faster than ever before. The fourth thing we talked about is understand the underwriting principles, right? When you look at yourself or your business, does it look like a legitimate operational business that serves its customers for the purpose it's meant to be? And finally, the fifth point is build solid business credit, understanding that this is a legitimate operational business. So you can go out there, build your wealth, build business credit, and get a lot of funding. So I hope this video was helpful. There's a checklist below this video that you can actually download about all the 5 points we talked about a little bit more in depth. So you can go through it, you can read it, download it below. and I'll see you guys next time. Once again, this is Ali Tarafdar, your guide and mentor. Bye for now.